Hello, everyone, and welcome to the latest episode of Trader Talks. Hope everyone is doing well. Remember to like, share, subscribe, and if you're on the podcast, the link is in the bio because we are going to go through some charts very shortly. We're going to talk about healthcare insurance stocks. Bit of a mouthful, that. And it's been an interesting 24, 36 hours, and we'll talk about what has happened. Quite a few of those stocks have come under pressure, United Health being the main one that we're going to look at, but we'll also touch upon CVS, HUM and ELV. As always, do remember the disclaimer: the presentation is for educational purposes only and should not be taken as investment advice, personal recommendation, or an offer of or solicitation to buy or sell any financial instruments. As always, whether you're on the eToro platform or on YouTube, do let me know your thoughts as well. I guess the first question for investors out there is, are we going to continue to move lower, or is this now an opportunity to buy the dip? So let's talk about what actually happened that led to some of these big moves. And for those that are on the podcast, down the bottom of the YouTube at the moment, there's a couple of the percentage losses for the stocks, but we'll cover those in a moment. But essentially, a couple of days ago, Trump really intensified his rhetoric against these health insurers, and he referred to them as big, fat, rich insurance companies and corporate middlemen. Not the nicest thing he's ever said, but also not the worst. He stated that his administration intends to stop taxpayer money from going to insurance companies and instead direct funds closer to patients. And following these comments, the administration then proposed a 0.09% payment rate increase for Medicare Advantage plans in 2027. And this was virtually a flat rate, right? And that shocked analysts who expected a 4 to 6% boost. So this has obviously led to pressure as well. And the administration then did go on to say that this move was designed to stop consumer gaming and upcoding, which is a practice where insurers allegedly make patients appear sicker on paper to claim higher government payment. So he's really trying to crack down on all of that. United Health had, I think it was its worst performance in decades. It was down about 20%. We'll have a look at that chart very shortly. But CVS Health as well, which is the owner of a Tenor, I hope I'm saying that right, which is a Medicare provider, that fell about 10, 14%. ELV was down 14% and CNC was down 9%. We're going to have a look at a few different charts as I mentioned, but let's just have a quick look at United Health to begin with. And, you know, what I would say about this chart is if we take away this week's performance, those people that bought the dip, and whether they got in at the back end of April last year or whether they got in August, it was probably going exactly how they would want. And you would imagine at the back end of last week, for all of these companies actually that we're going to look at, they would have been sitting thinking, oh, what a great entry price I've got in. This is fantastic. It's moving how I want. It's respecting technical levels. Goes up to a lot of people's first target, which would have been 384, which was the lows that we saw in September 2021. However, since then, it's moved lower. And again, probably not too much of an issue because you'd expected a move to push above the yearly high. That hadn't happened. This fundamental change takes place. So now I'm looking at this, and 295 for the week is going to be really important. And you know, it's tough to say bullish above it. But if we do close above there, it would be a good win for the bulls and not necessarily for the bears. So I think where we close the week will tell us a lot. Below 295, then you have to start thinking about the lows of last year to come into play around 245. If there really is momentum here and that breaks, then of course keep an eye on the pandemic low of 2020. Now, if you gave people the opportunity to buy United Health at $200, got to imagine people would be very interested to at least hear that out. However, as I said, if we close back above 295 at any point, it does just feel like that's a good indication of a reversal, and then we can start pushing to the upside here. I guess for a lot of these things you just got to wait and see, haven't you? But again, let me know your thoughts. But for me, 295, the very important level. But I talk about this a lot on webinars and these videos as well. When you do have a low, what can be a very good reversal signal is when it pops below, comes back up, and then retests it as well. So let's keep a watch on that. Then the next chart I wanted to go through, we'll go through Elevance Health just because it's the next one on here. And another one, I mean, look, these are all going to look very similar. Of course they are, but it's just behaved, from a technical point of view, exactly how you would have wanted it to. You have an area of support last year that holds up, price goes up to the next technical level, comes down to the support level you'd expect, next to the resistance. And look here, this is why I'm saying people would have been very happy to be long these companies because it closed above 361, technically great. Now, as I always say, I love technical analysis, but fundamental analysis rules everything. Changing fundamentals, you can see what's happened here. Now, I would again stress the importance of just seeing where we close the week. The key level for me here is going to be 295. One test, two test, three, fundamental change. You'd be surprised if it held, but if it does close above there, again, that's a win for the Bulls and not necessarily for the Bears. If we do continue lower, obviously keep an eye on the low of last year and then some real key support from 2020 as well. And I guess it just begs the question here, doesn't it? Like, have you now got a discount in these stocks? Yes. But does this fundamentally change your outlook on it all? Because, a lot of the results recently, certainly from United Health, actually aren't too bad when you look at revenue and stuff like that. So maybe it's a case of waiting for the dust to settle, dollar cost averaging in for those bulls out there. But do let me know what you're all thinking, because it'd be really quite telling, I think, just to get an idea of sentiment here. Because if we had asked this question at the end of last week, a lot of people would have been very, very happy. Let's have a quick look at CVS, and it won't surprise you all to see that it's a very similar chart. And actually, the worrying thing here is that we look like we're going to close below the 200-week moving average. All the others are below. Lovely trend line, retested it again before the news earlier this week. So that's a shame, really, isn't it? That it didn't go above that. But another one where, just to keep an eye on maybe in the future. Keep a watch on $70, massively important levels, been interacting with that for over a couple of years now. Below that, then obviously the Bears would fancy us getting us down to 58. If we close back above there, then this recent recovery can continue. So $70, very, very important. Also the 200-week moving average, because look, just on my screen, you can see how well it respects it. So you wouldn't necessarily want to see it close the week below the 200-week moving average. Our final one to have a look at here is going to be Humana. And this is slightly more worrying, I would say. But again, the week isn't finished, and we also aren't actually below that level at the time of recording. But you can see the pandemic low there, tested once, twice, 3, 4, and now 5 times. It will kind of watch out below, because you're going back then to 2016 levels around $156, and that would obviously be a bit of a worry. But at the same time, if you do believe we are going to recover at some point, maybe that is what you're waiting for, or your dollar cost averaging into it. It's another one where technically it's behaved pretty well, hasn't it? It bounced off the 2020 level, goes to exactly where a lot of people would be looking to take profit, comes down, gave another opportunity, hit there, comes down. Is this the other opportunity? Because you could argue, really, since mid-2024, we've just been in a range, and I would say you have. It might be, again, for those that aren't in positions, just being patient, waiting to see what happens at these lows. Can we get back above 205? Can we break that trend line rather than trying to catch a falling knife? But do let me know in the chat what you all think. I'm always interested to hear. And let me know what you want me to discuss on the next episode of Trader Talks. Until then, take care. I'll see you soon.